The market works like a family. And if you are only listening to the kids, the footprint, the timing, the levels, you will always show up late. I've been trading futures for 7 years. And for a long time, I relied on footprint only. Then I added volume profile and, it actually helped, but it wasn't enough. It wasn't enough until I understood how market structure fits into the whole system, how it connects everything. Then I finally started seeing consistent high probability reversals before they happened. And in this video, I'll show you how all these family dynamics actually connect together and play out, and why when the parents agree, price doesn't give a vote. Let's dive in. As I already said, I prefer to think of the market as a big family, where we have a daddy, as in a regular family actually. We have a daddy, and who is the daddy? Daddy is the volume profile. Then we have a big mother. And who is the big mother? I already said. Our big mother is the market structure. Then we have our naughty children. Footprint, key levels of support and resistance, and timing. And when we connect all these three, once again, footprint, key levels, and timing with the volume profile, and then with the market structure, can we predict almost any reversal with 90% guarantee? So, market structure, our mother is pretty often, missing. She's going out, she's going to different salons, beauty salons, spa salons, etc. Women. So 70% of the time the market is volatile. But when we have the structure, this is a resource. This is a huge resource for us to take trades, to take decisions. And when everything is combined, our trading can be improved significantly. Now, market structure. I know you used to something like high highs, low lows, but today we are not today. In my system, we are using a completely different thing. We use auction principles. I'm talking about balance and imbalance. So actually, market moves in two main phases: balance and imbalance, which is an impulse, and then again balance and then imbalance, and then again balance and then imbalance. And that's it. And when we have the structure, when we can classify this balance, so what usually happens, many traders just don't know what to do during the consolidation phase, during the range phase. Why? Because they don't understand how it's structured. They always follow the high, low, low things, but it's fifth grade knowledge, and I'm not going to repeat all that because it just doesn't make any sense to me any longer. Let me explain how the real market structure works. Everything always starts with an impulse. Then the first step of any balance is a fix. The second step of a potential balance is an inertial trade. I'll explain why potential shortly. So the fix and an inertial trade allow us to define the top and the bottom boundaries of a potential balance. Why potential? Because we can't classify any range or a consolidation as a balance before we see one or two responsive activities fully formed. What is responsive activity? Responsive activity is actually a response from a seller or from a buyer. Fix, what is a fix? Fix happens when institutional traders partially or entirely close their position. What is an inertial trade? An inertial trade is a trade taken in the same direction as the previous movement, and this is like 99% guaranteed trade that happens all the time. So the next step, and this is, by the way, this is the first segment of any balance. And then when we see one of the responsive activities fully formed, can we classify all these as a balance? Then we can see a second responsive activity. This is not a mass, but one responsive activity is always the mass. Please remember this. Then we can see a second. For this example, for the purpose of this example, I'll show you two responsive activities. And this is the second segment of the balance. The next segment of the balance is the third segment, which can take different forms. It can be responsive activity reinforcement. It can be an initial field reinforcement. It can be middle level reinforcement. And it can be push through rotations. Let me show you actually. These, in this case, this would be responsive activity reinforcement. If it forms somewhere just below on the fixed level, it would be an initial field reinforcement. What we have next? We can have a, let me draw a middle level here. Then we can have something like this, and in this case this would be middle level reinforcement. Then what we can have is a push through rotations, which can form here just above the bottom boundary of this balance or a bit below, and this would be push through rotations. Then what is the next step? The next step is repositioning. What is repositioning? Reposition is an impulse, a clear directional movement, okay, with very or no retracement at all. But usually this is an impulse. The next step is an initial fill, where institutional traders initially fill their positions. And the next step is retest, and then move continuation. And this is it. This is the market structure. This is how the consolidation or ranges can be deconstructed. Okay? Once again, everything starts with an impulse. We can classify any consolidation or range as a balance if there is no impulse. Then a fix and inertial trade potentially form the boundaries of a potential balance. Why potentially? Because we can classify any balance as a balance if at least one of the responsive activities is fully formed, and one responsive activity is always a must. We can't have more than two responsive activities, okay? And this is the second segment of the balance. And then the third segment. The goal of the third segment is to reposition the balance above or below the key resistance or support level. And it can take different forms. It can be formed as responsive activity reinforcement. It can be an initial fixed reinforcement. It can be middle level reinforcement. It can be push through rotations, just a bit above or below the key level. Then the next step is repositioning. Then the next step is an initial fill. The next step is a retest and move continuation. What is the next step? You can ask me, what is the next? The next step after the move continuation is another fix. So the market is cyclical. You see, it's cyclical. This whole thing is cyclical. Okay, now you have the foundation. You have the market structure. And when we have, as I already said, when we have this market structure, when we can see this market structure on our charts, this gives us a huge resource. Now let's actually get to the charts themselves. We always start our analysis with the weekly time frame. I always analyze 4 main time frames: weekly time frame, daily time frame, hourly time frame, and 15-minute time frame. And all these are like separate auctions. But the macro model here is this one, weekly auction time frame, okay? And what we see here, previously we had the balance, here we had an initial fill, retest, and move continuation. And yes, here you see fix with a question mark. Why? Because the next step, as I said, the market is cyclical. The next logical step of the market is fix, okay? But right now we don't have any factors for sell here, and our priority is a strong buy. And the only difficulty here is historical high. And the task here is to reposition this historical high and just continue the movement. Daily time frame, daily auction. Here we have a balance potentially forming. Why? Let me explain all the steps. Here we had an initial fill from the previous structure, then retest, move continuation, and then fix, potentially fix. And this fix and this inertial trade potentially finish the previous cycle. Okay? Once again, why potentially? We see this rotation here, this rotation here. This rotation could become a responsive activity. But before the price, before the auction brings the price till this level, we can't classify all these as a balance. Now it's just a potential balance, okay? And here we don't have any factors for sell as well. Hourly time frame, hourly time frame. A balance here we have, yes, here we have a balance that has been forming for the last two contracts. One contract is 3 months. I didn't mention, by the way, I'm trading just one tool, S&P 500, and I'm trading futures. So here we see a fix, an inertial trade, and we can classify this as a responsive seller's responsive activity. No. And then this, yes, this is a buyer's responsive activity. Now, what we potentially see here is middle level reinforcement or a responsive activity. And the task here is to reposition this white level 61.30. And here all this consolidation we can classify as a balance because one of the responsive activities is fully formed, but we didn't see seller's responsive activity. This is why it can still form. Now 15-minute auction. 15-minute auction. Here, an interesting structure here. An impulse. We have an impulse. This is, by the way, almost a textbook balance. An impulse. We have an impulse. Fix. Fix, where institutional traders partially or entirely close their positions. I'm repeating myself. I know, because I want you to understand the logic behind everything happening on the charts. What is the second step? It's an inertial trade. An inertial trade is a trade taken in the same direction as the previous movement. And this is the first segment of the balance. What happens next? Buyer's responsive activity. Buyer's responsive activity. Okay? And this is why we can classify all these as a balance. The next step is the third segment. Third segment. So this could become a middle level reinforcement, and these can be push through rotations. Yes, the third segment of the balance can include several forms, and this is absolutely okay. But at the same time, as we didn't see a seller's responsive activity, all this rotation could become a seller's responsive activity. The question here is how to understand what do we need to do. So the priority, once again, everywhere the priority is buy. Weekly time frame, the priority is buy. Daily time frame, priority is buy. Hourly time frame, the priority is buy. And even 15-minute time frame, the priority is buy. But okay, the next trading day, the New York, just imagine, the New York session opens. What do you usually do? Maybe you would draw some, let's imagine you would draw some support levels, some resistance levels, and would look for some trades. But in reality, as I said previously, what we need to do is to analyze the auction under the microscope. And with this purpose, we need to analyze the two, in this case, the two previous days. I usually analyze just one, but the week was not easy, and we need to analyze the two previous days. And here we analyze the footprint, here we analyze the volume profile and the volatility map, okay? So this was Wednesday. Let's take a close look at Wednesday. Wednesday, volatility map. The task was, once again, let's take a look at the 15-minute auction. You remember the task, right? The main task of any balance is to reposition key support or resistance level. And the task here is to reposition this level. And we need to understand when this is going to happen. When? Wednesday. Wednesday, one of the important days in the week, because Wednesday is the middle of the week and in 70 or 80% of the cases shows us what to do, how to act in the second half of the week. And we need to analyze it very, very closely. Now, take a look at the volume profile here. The point of control is above. Point of control is the above. All the volumes, all the overnight volumes that are here are positioned as selling volumes. The overall closure is neutral minus. When we can't say it's down, the closure is not down, but it's neutral minus, because the overnight volumes are positioned as selling volumes, but at the same time we don't see a closure below the value area. And this is where volume profile comes handy. It comes handy after the closure. It helps us to understand what is going on here and the potential intentions of the institutional traders. And this was Wednesday, and it didn't give us the task of this day was to show us clarity. Did it handle the task? No, it failed. And the last resort for us is Thursday. We need to understand. At that moment, we needed to understand whether the auction, 15-minute auction, would reposition this level or not, whether it would form this push-through rotation and reposition this balance or not. And as I said, Thursday was the last resort to solve this task, okay? This is Thursday. Let's analyze it very, very closely. Take a look. Actually, this day tried to build a reversal. What is the reversal? Let me quickly show you. A reversal usually looks like this. We have an impulse, then we have a balance, and then another impulse. So the task of any balance, as I already said, is to reposition the balance. And if when analyzing this day, I understood that the task here is not easy, is to reposition this level. And I understood if the task failed, then our priority for the Friday becomes variable. So what happened here? We have an impulse, fix, an inertial trade. Take a close look. An impulse, fix, an inertial trade, buys responsive activity. And what's next? The auction was trying to reinforce an initial fix or responsive activity, and nothing happened next. And this is a huge clue. For us for Friday to take a sell. The closure, we always analyze the closure as well. Take a look at the volume profile here. Again, the point of control is above. The overnight volumes are positioned as selling volumes. The closure is neutral minus. Not below, because the price didn't close below all this rotation. No. So the task failed, and this is a failure. The auction was not able to build a reversal. If it built a reversal, then in this case we would stick to our buying priority and buy on Friday. But as we can see, these two days, Wednesday and Thursday, showed us that the 15-minute auction is not ready to reposition this key resistance level. It's not ready. So what can we do? Sell. My priority for Friday was sell. Now, what we need to do? Okay, we identified our priority is sell. It's variable. Yes, it's still variable, because the buyer still could activate somewhere, maybe here, which is very, very unlikely, but it's still possible. We gathered clues. We don't try to predict the market movement with, I want you to understand this, we don't try to predict the market movements with 100% guarantee. No. Our goal is totally, completely different. Our primary goal, is to gather all the possible clues to identify the ideal scenarios for us to take a trade. Okay? And what would be an ideal scenario? Let me show you. An ideal scenario here would look like this. A rotation here, and then movement down. This is a positive scenario for our sell priority. And if during the pre-market session we see something like this, we just stay on the fence, because most likely we wouldn't be able to buy, and we already wouldn't be able to sell because the pre-market would take the whole moment. This also could happen, but in ideal scenario is this one, because the auction shouldn't bring the price. We already see this rejection here. And this is our aggressive level for sell. 61.39. And then a conservative level here would be this one. This is a conservative level for us to sell. And the timing, taking into account everything I just told you, to previous day, the positioning of the volume profile, of the point of control, the closure, the volatility map, the reversal failure, all these little clues for the last couple of days show me that this should be an impulse day. I'm not trying to predict anything. I'm gathering clues and prepare an ideal scenario for me. The price always, you see, the price itself always tells me how to act. If it shows me the ideal picture, I would enter a trade, you see. Now, taking into account everything I just told you about, my prediction is an impulse day. If during the pre-market session, I see this tight rotation, and then I would prepare to take a trade early. What does it mean? Early means 8:30, 8:40, okay? And this is where the footprint comes handy. I would analyze the footprints. By the way, for the footprint, I'm not using bid and ask any longer. No, for the footprint analysis, I just use the total volume, plus I have some filters here, as you can see, and these filters help me to understand where the volume is positioned. And this is the only thing I need. And this is the only thing I recommend you to use. Just imagine seeing all those deltas. I understand delta is a difference between bid and ask. Yes, but what does it give you? Our primary goal is to understand where the huge volume was printed and how it was positioned. Was it positioned as a selling volume, or was it positioned as a buying volume? That's all you need. And when you connect everything together, like I just did, this comes handy. But alone, yes, I know some scalpers do that. They scalp, but this is not what I do any longer. I am an intraday trader, and I'm looking for the most perfect and easy days to participate in. So right now we identified everything. We have priority. We have an ideal scenario in our head when we can take a trade. And now let's actually see what happens. Now we have about in 15 minutes the New York session will start, and we must be prepared. We must ask ourselves certain questions. Let's zoom out to understand. This is what I usually do. I always zoom out instead of analyzing the charts like this. No. I'm always zooming out to understand what is going on. And right now, I need to understand whether the auction behaves the way I need it to behave. All right. I do not force. Once again, I will repeating this throughout all of my videos. I'm not forcing the market to my prediction. Never. What I'm doing is I'm looking for ideal scenarios. Okay. I see actually what I see right now. A tight range, the point of control. This is where again the volume profile comes in handy. I analyze the volume profile, I analyze the volume behavior, I analyze the volume distribution throughout the pre-market session. The New York session opens at 8:30, and now I see this rotation. This rotation is forming just close to the level, to the dynamic resistance level I identified yesterday, okay? And I need to understand whether is everything aligned with my prediction or not. If not, what I do, I just adapt. What I always do, I just adapt to the market. And in this case, looks like that everything is ideally prepared for me to take a trade. Now I have 15 minutes to be very, very attentive. You see, you need to be, when trading futures, if you are just started, I don't know, but because you are watching these videos, footprint, market structure, I think you already have some experience. You know that you must be able to take decisions very, very quickly, okay? And in this case, I see that everything is aligned. Now let's see what happens next. Take a look at this. Take a look at this. This is the exact place I'm taking a trade. This is the exact place I'm taking a trade. This is the footprint, volume, total. I see the total volume. I see this little volume here. It indicates that the price is not ready. All this, once again, all this little rotation this is a volume, okay? This is a volume accumulation, and now this volume accumulation is positioned as a selling volume. All the factors are met. I'm taking a sell even earlier, even before the New York session opens. Why? Because just all the stars are aligned right now, okay? And I'm putting my stop here, a couple of ticks. Yes, I know. This is a market replay. Of course, this is a market replay because I'm doing my best to explain to you how it all works and connects together. And in real life situations, you will have to react more quickly. You will have to make decisions much more quickly. Okay, and now we need to understand where we would take our profits, taking into account everything I analyzed, taking into account everything I see in this structure. I assume that the price can move here, 60-30, this level. Yes, this level. And we can see some reaction here. This is why, once again, 60-30. Now we need to be attentive to what is going to happen here on this level. 6109. This is the support. This is the dynamic support, as you remember from the previous day. It's very unlikely that we would see some huge reaction here, but still, we need to watch our trade very, very closely. Let's see. Now we need to analyze the volatility map. Now, what is happening here? Potentially, so we had an impulse. Remember the structure. The structure talk. Okay? This is a fix. And the next step of the auction, so, is an inertial trade. See. Yes, we have a fix, an inertial trade, a shortened one. It was not fully formed, but still. Now, all these, we need to, as I said, we need to be careful with our trade. This is our money. we define these two potential zones of this balance, of this intraday balance through this volatility. As I always say, the market is all this repeats on any time frame. That's not always true because 70% of the time the market spends in volatility. But when we have a structure, this is a huge resource for us because it helps us understand the next move and we can take a high probability trade. Okay, let's see. So right now we have a fix, an inertial trade, and now the next step is a seller's responsive activity. Let's see. Yes, as you can see, we had a balance, fix and inertial trade, seller's responsive activity, seller's responsive activity reinforcement. And now the next step is repositioning. So this was the first segment of the balance. This was the second. Here we had just one responsive activity. It just confirms the seller's intention to continue the movement. There even was not a struggle. There was not a response, from a buyer. And this is a resource for us as well. Let's see what happens next. Now we have a repositioning. And this, here we can classify this as an initial fill where intraday institutional traders initially fill their position and then retest and move continuation. Okay? There is nothing that contradicts with our trade. Nothing. We have even a supportive factor for our trade, and this balance serves as a supportive factor for our sell here. Let's see. As you can see, the price just hit our target, and all in all, this trade I took, let me tell you, around 400 ticks. 400 ticks. You can count on your own, but let me help you. One tick. If we trade standard ES futures, not micros, it will be one tick equals this, and we multiply it by 400. This is what you could earn. This is what you could earn on this trade. Of course, these movements do not happen every day, every single day, every single time. No. But when the market structure, you see the beauty here, when everything is aligned, the market structure, the footprint, the volume profile, and when you are able to align everything together, you can take trades like this. And the question here is, do you actually need to trade every single day? No, because most of the days, as I always say, and as I already said, most of the days the market spends in volatility. So why do we need to waste our energy on days like this? Yes, this was, for example, on Thursday, this trade was doable. It was tradable, yes, but in real life, sitting through this volatility is hard. Just believe me, if you don't have a lot of experience, it's hard. It's hard to take trades like this. For example, yes, it was doable. Here, you take a trade and then the price goes here and your heart starts to beat like hell. I just remember all those previous experience. I know how it works. This is why right now, nowadays, I'm looking just for trades like this. This is what I'm teaching in my 10-week program to identify all these. The market structure, when to use footprint, when to ignore it, when to use volume profile, when to ignore it, and how to align it all together. Okay, for this video, I think it's enough, and take care.